evening and welcome to our webinar. Thanks for joining us tonight to talk about all things property investment and in particular the interest we're seeing in the Birmingham region. So joining us tonight from Prosperity we have Sam Richards, Oliver Thacker and our CEO Joe Billingham. So as well as hearing a little bit from the team, we really want to keep this as interactive as possible. So we want as many of your questions as we can. So do send them over. Just type them into the comments box next to the live screen and remember to add your name and location. Okay, so let's go. Joe, perhaps you could start by telling us a bit about Prosperity.
Okay, welcome everyone and thanks for joining us this evening. Prosperity, Birmingham-based developers, as you'll most likely tell from myself and Sam, Oliver, and then Sam sounds a bit different to us because he's not actually from Birmingham. But yeah, so we're Birmingham-based developers, although we do take a national approach. So we have conversion works in Southend, which is the HSBC Tower, up to Birkenhead. And then in between, obviously, lots of different developments ranging from, say, conversion works to new build, houses, but we have got a focus in Birmingham city centre. Prosperity as a group, we have the developer, we have Prosperity Wealth, which is our interaction point with investors and owner occupiers, and we have our lettings and management business Lamont, an open market estate agency, and then we also have a mortgage provision with the idea being that we can really offer a holistic service to clients.
Okay, great. Thanks, Joe. So, Sam, perhaps you could give us your view, please, on why you think Birmingham is the best place to invest right now.
Thanks, Emma. So, from the top, so I read economics at university, and it was a career in finance laid out for me, and I realised through family experience that there was, great opportunity in property because I felt there was bad advice. So, I joined an investment consultancy business, and we had developers and locations all over the country. And in the 8 years plus that I've been involved in property, Birmingham has consistently been the best performing location. And I think a lot of that is to do with population growth. Obviously in property, you want the supply and demand fundamentals to be in your favour. Yep. But I think price growth is driven by infrastructure projects, regeneration, physical improvements to the city. And so, as Joe points out, I'm not from Birmingham, and yet I've moved here for my work and my life. The opportunity in the city is a place like Manchester. They've had that government level regeneration. And now, not only with HS2, but also just the physical improvement of the city centre is such that now is the time to capitalise on it. So,
there's so much going on in Birmingham. I think that's what, sometimes, and particularly at the moment where, we kind of, the view or the media would make us believe that, the city's dead and, but really, I mean, I was stuck in the car this morning for 40 minutes trying to get into town. So, it's a busy place. Of course. But I think, you can look at the cranes across the city. If you look at the infrastructure that's going on and you take out the PRS element, government, the infrastructure, the PRS play, doesn't leave a lot of actual residential in the city.
Yeah, and as the the Birmingham migrant, I'm an expat from the south. We can't, the elephant in the room is that Birmingham had a poor reputation, and I think that in the 60s they got it wrong. But what that means, and the council have now turned that around, and there's just a once in a century regeneration. So they're knocking down so much of a city core, and this time they're getting it right. So we're in the city centre here, we're in the Jewellery Quarter. Within 10 minutes walk, you've got thousands and thousands of staff. I mean,
look at Paradise, for example.
Yeah. So Paradise, that's HSBC, that's PwC. I mean, for me, Brindley Place was, and Joe, you can talk about this more than I can because it was in your time. Brindley Place was derelict, was it not? And,
it was, I think when people thought about building city centre apartments and talked about the type of prices back then, everyone kind of thought it was all a bit mad, really. Crosby, came to the city and, did a lot of great developments. I think, certainly, sort of started the trend and sort of started that sort of city centre living for Birmingham, which is now, commonplace, isn't it?
Yeah, I think one thing I really want to get across to investors and clients who consider this place from an outsider's perspective, Birmingham, it's so much more than HS2, just for train line to London. Birmingham historically is the UK's second city, and its roots are in industry and the Industrial Revolution and manufacturing. But for me, the story of Birmingham is its location to London was a blessing and a curse. So you had the brain drain where people, I mean, it's true of the whole country, where if you were a smart graduate, you go down to London. But now London is so expensive. So, I considered it myself. I could spend £1,000 a month to rent a room, or I can actually have a good quality of life in Birmingham city centre. And I think what you've got is big companies moving their operations to Birmingham to have cost savings, to offer their employees some quality of life component. And that means that Birmingham's economy is just so vibrant now. And so, I just want to get that across, because obviously it's your city, gents.
I think, one of the things that, we probably won't go too far into it, but, the city's, 5-point plan, which is very much driven off bringing employment to the city. So first and foremost, they recognised, for any sustainable change in the city, it needed to be employment based. So, bringing the employers, and still currently as of today, to house an individual working in Birmingham is still around a 40% saving to working in the capital of London. That's what's driving the employment, and on the back of the employment, we need housing. On the back of that, the connectability of the city's totally changed. I mean, from the time that you've been here, certainly, Oliver and I remember it back when getting across the city was quite a challenge. But now with the metro system, and then again, as we move into HS2, as you say, that's just really only part of the journey.
Yeah, I think this just reminded me. So with London, that the house price to income ratio is over 12-1, which affordability in London is. I don't know how a young person can afford to buy that, but also how can an investor secure the yield they need to make that attractive? Whereas in Birmingham, house prices are 6-1 on the income ratio, so incredibly affordable by comparison. But also that means that the yield here is 5% plus. And then you talk about that regeneration wave. There's a lot of activity in Manchester with Media City, those sort of flagship projects. But I really think a lot of that has been priced in now, and the prices of the property have sort of come away from the rental incomes, whereas Birmingham's in that sweet spot still, where you can achieve a good yield, get access to capital growth. So go back to Emma's original question. I think all those factors, the regeneration, the infrastructure improvements, the access to the capital in the future. I mean, if you were looking at UK property investment from either the domestic or an international perspective, I really think that Birmingham is up there in terms of key regional cities.
Okay, well, thank you, Sam. So, Ollie, over to you then. Perhaps you could tell us from a prosperity perspective how you work with your clients, how we do things here.
Sure. So we have a variation of client here, located all around the world. So bringing back on what Joe said earlier, with it being a kind of holistic approach, we get the client at the start of their journey. We found out a challenge for a lot of clients is having chunky deposits for kind of buy-to-let mortgages. So we work with them to spread the deposits over the bill period itself. Then once that's processing, we work with them to find the right mortgage, and then onto the lettings and management, and to control that investment and to look after it and manage it.
Sure. I think it's important that we touch on we do work a lot with owner occupiers. So Sam and Oliver probably more investor focused and advise investors. So really just looked at what they're looking to achieve, both from long term objectives. What are the real objectives of the client. What are their goals? And I think that's a really good place to start, because without understanding that, really, it's really difficult to advise anyone on any investment, but particularly property. But owner occupiers, obviously, different profile, but certainly some investors, owner occupiers, we work with both.
Yeah, just ask, Jen. So sorry. So having joined Prosperity in March of this year, I do think it's worth taking the time to talk through the payment plans, because my background in the industry, and for investors listening at home, Prosperity does have a unique offering. And so how do you help your investors, Joe? I mean, having founded a company, it seems to be the unique selling point of Prosperity almost.
Yeah, well, within my career, I've spent time in Asia, Middle East, and I think one thing that was apparent there was the kind of the average expat wanted to invest but most of the products that they were investing in were equity-based funds, but the way they would invest would be on a monthly subscription model. So they would buy into an investment bundle of shares, and then they would pay into that on a kind of monthly basis, ranging between 1,000 to 5,000, for example. And then really we just took that and then used the same format, but at the end, obviously you're buying yourself a property. So rather than just investing monthly in equities, we build that into a deposit. So a client can buy a property from, we've got properties ranging from 66,950 up to 450,000 in Birmingham, for example. So a client would we would work with them, understand what it is they're looking to achieve. But on the payment side, simple terms, we take the deposit, divide it by 24, and then the 30% deposit is just paid monthly over the build period. And at the end of the build period, obviously then if clients are buying cash or whether they're funding with a mortgage, we can arrange that as well.
I think it's worth adding to that as well with regards to the owner occupier and the first time buyer. We've got some unique payment plans for those purchasers who maybe don't have the full deposit and they're saving alongside the build process. They're then building up their deposit to purchase their home.
Yeah, I would also, again, the outside perspective coming in, which is, I'm losing that as I spend more time with Prosperity, but I think it's the reason that we can do that as a developer is that Prosperity is such a well-established company. So you have relationships with financial backers and lenders, but it's such that this business isn't as dependent on investor deposits as a startup developer or a small scale developer. So I think for a lot of people listening, 30%, 35%, which is what we as the industry take, it is incorporated into the cost of construction. Yeah. But because Prosperity have got such a good track record, we can borrow and have access to that financial backing. Yeah. I think that the people, they should understand that. It's a really, it's a point of security, I'd say.
I mean, it came up on a call that we had just recently, and the question was around, why'd you take the deposit and whatnot. But I think the key point for us, talking to another industry professional that was looking to introduce an IFA firm that were looking to introduce, the product to their clients. We were talking about the deposit, and we were talking about the fact that as a developer, we're not reliant on those deposits. So I think that was a key point. I think Sam wanted to raise. Is my mic okay? Getting someone waving their hands in the background.
Checking out.
As the dog escaped.
We haven't seen Maisie yet. So we've got some questions from the listeners.
Lots of questions coming in, so I'll kick off. So we have a question from Bala. Thank you for that. Saying a lot of companies are facing financial challenges currently. So how is investor money protected?
Okay, I'll kick off with this one. Yeah, I mean, I think one, as I touched on, as far as the activity in the city, but certainly from I think it's pretty well publicised the activity in the market. So I take on board the fact that many businesses are suffering. Certainly there's large sectors of the UK, industries within the UK that are struggling for obvious reasons. But so far, certainly that the housing market and developers have been unaffected, and if anything, I think the media have made it quite apparent of how much activity we've seen in the market, both in the open market with first-time buyers, currently admittedly fueled by some of the stamp duty savings. But certainly, us as the developers, very fortunately, under lockdown, the team worked great. We worked remotely, but we had a lot of activity, and sales were on par with what we'd usually expect. Post-lockdown, we have seen quite a large spike in sales. We've been hitting sales targets and above for since June. But I think just to, that aside, just to answer your question, I think it's a 3-point question really. So how do we protect clients? Firstly, all of our properties come with an NHBC or equivalent warranty, which would mean that the first 10% of your funds are fully protected by the warranty provider. Secondly, when we collect our deposits monthly, there's an elegant protection offered there to clients, because as you're paying your deposit, you're seeing your property being built. So unlike a developer that's going to ask you for 30% up front and then at some point get to start construction, very much with Prosperity, you would be exchanging contracts with around 28 days, 6 weeks max. And then from that point, you're making your payments. Alongside that, you're getting monthly updates on the development. You can see live updates on the website. You can come to site, obviously, if you're able to. Certainly, we would have a lot of contact with you, advising you, sending you images of the development, coming on. So there's a lot of comfort there, I think. And whereas you're actually parting with is a sizable amount of money, but it might be 5,000, it might be 7,000. To initially sort of, get underway with your purchase over the next X months. And by that point, the development's coming out of the ground. Thirdly, I won't take too long. I think really, with development and with buying off plan, if you look at, a reputable developer, your solicitor does the due diligence as far as the land ownership and the fact that, we haven't got excessive charges on the land debt and whatnot. Each development is held in an SPV, so the PLC model is very much, PLC and larger developers, should I say, is very much, there's a top co, and then beneath that there are multiple SPVs, so single purpose vehicles, which hold the asset that you would be investing in. So you're not investing in Prosperity, you're investing in the development as a standalone. So if we look at the risk curve on what you're investing in, if we own the site, if it's got planning, if we've got a fixed price contractor, all of which we'd evidence before we would get underway, and certainly prior to exchange of contracts, the risk is really with the contractor. So how do you mitigate that risk with the contractor? So two key ways. One, all of our contracts are on fixed price contracts, and secondly, we have step over rights that are bonded. So not to sort of get too in depth, but the reality is, if there's a risk in the contractor, the risk is the fact the contractor can't finish that work. So we've seen contractors from small, medium to very, very large developers go under, over the years. But if you have a fixed price contract with the contractor on a JCT contract with step-in rights or step-over rights, you can step over that contractor if they can't finish the work. And then you wrap that contractor with a bond, which is an insurance policy that makes sure that if contractor A can't complete the job, contractor B can be brought in, and the insurance covers the difference between the cost of contractor A and contractor B. So if you've got anything to add, guys, but hopefully that kind of covers the question.
It's to unpack it for the layman sort of investor.
Sure.
That is one of the key reasons I joined Prosperity. So a small scale developer, with the internet, you can make yourself look very large and international, and the model is the same. But the difference with Prosperity is that so if a contractor were to fail, you have pre-agreed a bonded price of the works. That is the uncommon component. So, for people who are watching this, it might be their first investment. The trouble is, we get so deep into this because we deal with it every day that we forget to come from the outside. So it's, how is my money protected? So you have a limited company, each development's in a limited company, so there's no cross-contamination risk. So if one development fails, there's no spread. But the fact that Joe and the team on the development side, they go to the contractors and get the quote, and then they lock that quote, and then they get what is effectively an insurance, a bond on that quote. It means that, so when these guys invest, it's as secure as it's possible to be. It's a belt and braces approach to investing, and again, because I've got that consultancy experience, so I had developers all up and down the country, and Prosperity is as large as it's possible to be for a privately owned developer, quite frankly. The next step is PLC status, but I think that's something that doesn't necessarily get across to those investors. And really, Jenny, it's one of those situations where the best thing to do is for people to get in touch and to understand it deeper. Because
well, I mean, we're happy to talk to obviously the client directly. We're happy to talk to their professionals. So if they've got an IFA, if they've got an accountant, if they've got a solicitor, happy to provide whatever those professionals require to be able to advise the client. I think one of the challenges I think at the moment, I don't know about you, but there's such a myriad of investments out there. And as you say, the internet can make anything look very glossy and sort of
it's amazing.
So, I think look at if you're looking to invest, whether it be with Prosperity or another developer, look at the track record, look at what's actually been delivered, look at how long they've been doing their work, how many units they've delivered. You know, go and have a look at some of those projects. If you want to come to Birmingham, we can show you sites that we own. We can show you sites that are halfway out of the ground. You can meet some of the guys on site. You can have a look around numerous apartment developments that we've delivered, and obviously meet the tenants if you need to. But certainly, we've got a range of developments in multiple states that you can come and look at. Look at our track record, do all the obvious searches on the internet, look on Trustpilot, see the type of responses that we get from clients that have bought from us, that have invested from us, first-time buyers, tenants. So it's all out there. I mean, I think you just got to do your due diligence, really.
Yeah, and the final point. So I think the initial question was about uncertainty in the markets and the status. The thing is, in this time, property and prosperity it's for tangible assets.
Yeah.
So the equity market is absolutely booming. That's largely due to quantitative easing and governments just whenever you face financial adversity, government intervention is such that they will open the taps and spend their way out of that economic problem. And so, if you in the time of COVID lockdown, we're reaching sort of market highs, and I think investors are looking for tangible assets as the safe part of their property. I mean, it's no coincidence. Over the last week, we've seen sort of penthouses selling at JQ rise. I mean,
450,000.
Common sense, emotionally, would tell you that this is a time of uncertainty and to be cautious. But those who understand the model properly realize if it's part of their portfolio, you've got cash, equities, and property, and whatever other alternative assets you want to own. But this is time they're locking in those property investments because they're concerned about the volatility of equities and other non-tangibles.
For sure.
So
I think one of the problems at the moment is that you can your view of the world can change kind of a few times a day. I listen to Radio 4 my students on the way into work, and you can leave the house feeling one way, but then you can listen to an hour of Radio 4 and then have a different perspective on things.
Yeah, and I think sell it all.
But I think certainly the point being that investors or first-time buyers, anyone that's looking to invest in anything really, I think they can be swayed, and we're in this kind of this time where there's just so much information and some of it's negative, and it's difficult to kind of just cut through, isn't it?
Yeah,
sure.
I would say so. The reason that post university I chose property over equity markets is that
there's some common sense in it.
But nuts and bolts. Yeah. So Oliver and I were investment consultants. We talk to people. So I am doom and gloom. I started studying the week that Lehman Brothers collapsed. So when I sell an investment property or advise someone into that position, it's can someone in that town or city or location who has an average job, a robust job, afford to rent that property?
Yeah.
And so whether it's Chesterfield or Southend or Birkenhead or Birmingham, it's will that property, as I say, wash its face? Will it pay the mortgage? Sure. Will the income be produced that meets that 5% plus yield? And it's always the case. And I think it might be worth highlighting it. So we price our projects with that in mind.
I think it's almost you work backwards to a certain extent, but I think it's a good point because realistically, if you're looking at when we look for sites, we get offered sites. You've got to look at the fundamentals. You've got to look at employment, infrastructure, and yes, there are areas such as Birmingham that will see exponential growth because there's so much going on and a real drive into that particular hotspot. But you don't have to be buying in the hotspot. You can buy on fundamentals, and that's one of your safest routes, really. Yeah. Another question?
Okay. Well, Bala, I hope that answers.
Thank you.
Okay, so we have a great question now. Unfortunately, it's an anonymous viewer, but and they say, are all projects developed by yourselves, or do you get a local developer to build the developments, and then you promote them?
No, we're not promoters. So we are developers. We're not sales agents. So again, I think that's a really good question. Because you're either dealing with a developer or you're dealing with a sales agent. So there are very few developer sales businesses. Certainly in Birmingham, there are two pretty much. There's ourselves and Seven Capital. Of the two largest developers that actually interact and sell direct. But outside of that, there might be another 30 or 40 sales agents that sort of promote developments. We do work with partners on the PDR side. So we've historically we've worked very closely with ALB on our conversion works. They're specialists in sourcing, converting PDR projects. All the new build work we do in-house. So although as a developer, you're not always the contractor, and in a lot of cases it's safer to not be the contractor unless it's something that you've done before. So certainly, JQR, for example, is our 226.
Yeah, 226. Yeah,
units,
24 stories.
24-story tower on Summerhill. So that development, as an example, is due to be built by Interserve. Obviously, someone that has got vast more experience than us in building towers.
Yeah.
We wouldn't try and build a tower. We wouldn't attempt to do that, and certainly, put clients' money at risk. So we are the developer. We own the site. We've run it through planning. We are doing the sales piece, but the contractor will be a separate entity that's a specialist in delivering that size and scale of development.
Yeah.
Another question?
Okay, can you just take me back to that previous question? Okay, so we've got a bit of a controversial one now, but I think the aim of this webinar was to keep it as transparent and authentic as possible.
Sure.
So we have a question from DT, and he's looked on Trustpilot, and there are a few comments on there whereby rent guarantees have failed, and can you allay these fears? And I think it's a good question.
Okay. Rent guarantees, right? Okay. Well, we don't traditionally offer rent guarantees, and if we do, we've actually got a rental guarantee which we're actually due to launch, and that's an underwritten guarantee by the developer. So I think there's certainly, if there's any confusion around rental guarantee and rental assurance, we do have a rental assurance plan, which ultimately is at completion. The property goes into a managing agent, and that managing agent will manage the property throughout, both the tenant and then obviously ultimately the block is managed by the block manager. But traditionally we don't offer guarantees. You won't see guarantees on any of our collateral, and I think if you do your due diligence, and then certainly I'd be interested to know who DT, what experience he'd had, or certainly whether it's a direct experience or whether it's a kind of a Trustpilot. I mean, I think Trustpilot's an interesting one because you can't please all the people all the time, but genuinely, I think if you read our responses, some of the time, and I don't say this in a condescending way, but some of the time, I think it's maybe confusion whereby maybe a rental assurance plan has been deemed as a rental guarantee. We don't offer rental guarantees. We don't like the word guarantee. I think generally products that are in the market with the word guarantee on them are something to probably stay away from.
Yeah, I'd also add, so again, having joined this year, Prosperity as a company been going for a significant period of time. There is a constant evolution and learning process. So just to reiterate to investors, so you've got Prosperity, the development company. In-house, we also have Lamont, the lettings agent. So since I joined in March, I've not seen a single product where we haven't phased or released the market to ensure smooth uptake. And there's nothing we've sold that would require a guarantee per se. So in Birmingham City Centre, for example, I mean, they're queuing up to
Demands there,
it's you're queuing to rent. But in our regional locations, when we phase the release, there's always a smooth uptake. So I feel like that's always been the case, but
I mean, something I'm sorry to interject there.
Of course,
something I'm quite kind of passionate really about sort of saying, I think is that you're buying a property, it's an investment. Being a landlord is not a totally hands-off experience. It takes some interaction. And I think that if investments are deemed to be sit back, relax and let everything happen for you, the reality is you're either being charged big fat fees for the privilege, and then that pretty much strips out all the real return, or it's unrealistic. You're buying an asset, you've most likely got your own home that you've bought and needs maintaining. It's no different with a rental proposition. You're buying a property to rent it out. We will, as a developer, promise to deliver size, specification, price, on time, and then it will go into the rental management business. And I also think that maybe you can tell I'm kind of getting a bit. I think it's just something as well is sometimes we will get a complaint. It might be on Trustpilot. Prosperity my tenants said this and the tap's leaking. There's a point where maybe 2, 3, 4, 5 years on, as a developer, we can only do so much. We deliver a property specification, it's fully snagged, it's signed off by building control. We do everything possible to ensure, and you'll find very, very few clients have got any issue with what's been delivered. But certainly, I think there's a point where, as a developer, you do have to hand that property over, and it doesn't become our rescibility.
It becomes, I think when you've handed over 4,000 units,
that's the thing with Trustpilot.
As well. I think with rent guarantees and rent assurances, we're selling liquid assets, so they're home buyers, they're investment purchases, but everything on our books, as I can see, as I say, it's not my baby, Prosperity. I'm a consultant, and we take every precaution necessary to ensure that that property is occupied, mortgage will be paid, the rent is coming in, and also we pick locations, as you said earlier, the fundamentals are there. So I'd really be curious to know DT's experience.
I think it's
either DT's experience or DT's been on Trustpilot and then found either a tenant or maybe an owner that's
certainly
sort of believing.
Certainly not a problem for Birmingham City Centre. I mean, so we are a letting agent here. We're neighbours with a letting agent. I've lived here. I can tell you, securing a property is a challenge. So in Birmingham City Centre, I mean, with the site we're ostensibly talking about tonight is JQ Rise in Birmingham. We are less than 15 minutes from 30,000 plus jobs. Voids are not going to be your concern at all.
Okay, so we have another question, again an anonymous question, and they ask, does the process vary from how experienced you are in property? I.e., if you're new to investing, if you're a seasoned investor, how are they welcomed?
I mean, sure. I mean, we work with every client differently, and each client is unique to us. So if it is a seasoned investor, they may want to do a bit more themselves, the decision making, decide on the lettings and management themselves. But I mean, if it's your first time investing, we are there the whole way through, and I think that was kind of, from what I take, it was one of the aims of Prosperity, is to be there for the whole process. And your journey starts once we hand the keys over, really. So we're going to work with you through the process of the deposit, the building up the deposit, securing the mortgage, finding the tenant, and that whole process is, we can be real hand-holding.
I think it's but you kind of get, two kind of key distinct different types of clients, don't you? I think you get kind of, very much your first-time investor, wants to understand the whole process, is understandably nervous. They need advice on, what plot to choose, why to choose that plot. Their options and different price points. Again, you're looking at their affordability, what their objectives are. And then you've kind of got the investor that's, been there, done it, and sort of probably got the confidence to say, look, I want to buy this, or my objective is this. So
sure.
There are different sort of, to your first time buyers that are probably buying more emotionally, or at least, they're living in the property. So, it's a different outlook.
I think the thing is, so if we come at it from, we want our buyers to be excited and confident, happy in the investment. We share construction updates, it's good news, and we often finish developments early, which is novel. The thing is, with those seasoned investors, when we send them those updates saying this is what's happening, if they want to ignore it or just watch it over, that's fine. But for other people, when it's your first investment, it's a wonderful experience.
That's good feedback.
So as a consultant, there's nothing that gives me more joy than phoning someone up and saying, look, works on time, here's a photograph of your unit, and it's exciting. And there'll come a time when you and Oliver and I have our own portfolios, and but 10 properties is not exciting as the first. But I mean, I think above all with Prosperity, with the payment plan, we really deal with investment clients who've had their first property with us, and now they're on their fifth, their sixth plus. And because
52% of clients still buy property within 2 years.
I think what happens is they get so accustomed to paying that monthly installment, it becomes like a savings plan. And so these guys, for them, it's their retirement, and they want a portfolio of 5 to 10 properties by retirement stage. And so they might be a little bit more relaxed, let's say, because they know it works. But it's still fun to give them a call and say all is on time.
I think when I deal quite a bit with IFAs, so for them, I think their products, nothing against their products, but your typical kind of, you buy a bond, you buy some equities, it's not really interesting, is it? It's not really an experience. Or
that's it. But I would say for those high net worth clients out there, you should come to me. Oliver doesn't know what he's talking about. We can sell whole buildings. It's fine. We're happy to deal with those high net worth and funds.
Exactly.
Absolutely. So Joe and I will talk you through every step of the way. That's exactly it.
Okay, another question from Gavin, and he says, why should I buy something off plan when there are already so many developments completed?
In the city?
In the city.
Okay. I tell you, there's a very specific answer to that question, and it all stems from Grenfell and what we require, which is an EWS1. So off-plan properties are built to current standards, current regulations, and come with all the certification for mortgaging. There are multiple developments around the city that don't hit those requirements and aren't built to those new legislation, where you cannot mortgage, and there are challenges. So again, if you buy from Prosperity or you choose to buy on the open market, I think the key point there is you really need to ensure that the property is mortgageable because it's built to the current standards, fire specifically. 2, as we've referenced a lot tonight, the affordability factor. So Gavin, if you've got a lump sum deposit and you want to be able to put that down and you want to be able to get some income straight away and buy your purchase and tenant it out and get all that done very quickly, we have got build complete units, but generally if we're talking off plan, which was the question, that wouldn't particularly be our forte. So you might want to go into an estate agent. Certainly you'd want to ask the question about an EWS1 that would need to be provided with any purchase that you buy if it's a second-hand property. So 1, you've got the fire point and the current building regs. 2, you've got the affordability factor. If you've got a large sum deposit, then great, and you want to move it on quickly. If you haven't and you want to build that deposit up, then off plan works because you can pay that deposit whilst the property's being built. And 2, there is a premium in the capital value that you can obtain whilst the property's being built. So yes, you want to get to the point of renting it out, but somewhere between now and the point when you actually complete, we'd certainly hope that you would gain some capital appreciation within that window of time.
Okay. So, next question, again anonymous, unfortunately, but they say, do you think the loan to value ratios will be affected with so much development in central Birmingham?
I might just kick off this one and then
take off.
But I think with the LTV point, the lenders currently, there was some retraction in the market early doors with COVID. The majority of those lenders have come back. So from a pure lending perspective, LTVs are back to where they were. There's a big government push to increase loan to values, both for investors and first time buyers, increase that amount of debt that you can secure against a property to continue to fuel the market. But I think, as Sam touched on, and you could probably tell us a bit more, in the city, you can come to Birmingham like a lot of key cities around the country, and you can look at a lot of cranes and you can see a lot of building work going on. But if you do your due diligence and actually sort of map the city, again, information that we can provide or is openly available, and you actually can see what's residential for sale, what's PRS, which is public rent, private rented sector housing, both governmental and funds, and infrastructure. There's actually very few developments in the market at the moment that you could buy as an investor. So I think, yes, people come into the city and say, who's going to live in all these flats? The people that are going to be living in these flats are all these people that are coming to Birmingham for employment. And you look at the employment growth and you look at the big companies that are moving from London, the back offices to Birmingham, they've all got to be housed. And generally go around the estate agents, be a prospective tenant, be a prospective buyer, I think you'd be surprised in actually how few properties there are to rent and how few properties there are actually for sale. For sure.
Yeah, I would highlight also the difference between the retail mortgage market and then the property investment mortgage market. So we have an in-house broker, and I use that word because a broker by definition is a deal maker, as it were. For a retail investor who goes to a high street bank, they're not there to find them a deal. They're there to tick boxes until they get essentially rejected or offered a ridiculous rate. And so the reason that Joe and Prosperity, you built this lettings team because you wanted the quality control of the lettings side. You got the in-house mortgage team because we deal with international investors, foreign national investors, and we have a broker who will find the deal on the mortgage side that fits their needs, as opposed to if you were to approach cold, a high street lender, you don't necessarily fit into their standard boxes and systems. So it's computer says no, and it's amazing how many clients we get because we manage the completion process very carefully. We'll be in touch months before completion to say we're completing soon. How are you, cash, mortgage, developer finance, and so we help them through that process. And a lot of investors will say, oh, I bank with high street bank, I'll get a mortgage through them, and they come back, oh, that didn't work out. And so some of them it's a concerning experience because they'll feel, oh, I can't get a mortgage. We'll say that you can, and so we arrange that. So on the LTV side, I'm incredibly confident because this year has been a very busy year for completions for Prosperity. I mean, four or five projects completing almost simultaneously. We'll say quite challenging projects from a mortgage side, and the brokerage team here they've worked wonders.
I think one of our kind of key decisions, aside from the housing that we're now due to launch, was bringing owner occupiers into our buildings because the market of really sort of investor-led properties is an area to stay away from. Really, you really need owner occupiers there, both for mortgageability and I just think the vibrancy in properties are different.
Okay, thank you. Well, I was going to wrap it up at this point, but we do have lots of questions. So there's a couple more.
Should we do quick fire?
Okay.
We'll do quick fire. Okay.
So, the next one is, what is your exposure to overseas purchases? Do you have a cap on the number of plot purchases per buyer?
Good question. Okay. So historically, and as a business, we were very much focused on overseas buyers. So if you go back 7-8 years, we were probably around 80% exposed, if that's the right word, to overseas investors. We used to work a lot with both expats as well as non-UK nationals. As the business has developed and as a developer, we've expanded into multiple streams of sort of different client bases. So we work with a lot more owner occupiers now. So naturally, they're not offshore investors. They're living in the homes that we're building. We've got a lot more coverage across the UK. So I think to answer the question, it's probably shifted now. So I think we've probably gone from sort of 80% being offshore investors to around 20-25% of our clients now are probably offshore investors. That's still a healthy number. We still do a lot of business in Singapore, Hong Kong, Middle East, Abu Dhabi, Dubai, and that's as most developers do, but more on the investment side. But I think, as I say, as the business has evolved, both from networks in the UK as well as the owner-occupier market, that's really changed the dynamic of the percentage.
Okay, thank you. So, final question, I think, can we use a limited company to purchase these off-plan properties if I have difficulty getting credit at this time?
Yes, most certainly. In fact, a lot of our buyers do use limited companies to purchase in if they're multiple. If they've got multiple properties in their buy-to-let portfolio. There can be many reasons that they do.
Yeah, sure. Also, we've been talking about Birmingham tonight, but one key part of Prosperity is the developer finance or the no mortgage deal. So in that instance, you take the property value, the investor buyer will put down 65 or 70% of the property value during the build period, And at the end, we, Prosperity, fund the balance, typically on a low interest or no interest basis. And so that's very, very popular for our investors who have credit issues, international investors, or they just want access to unencumbered income in the near future. And the limited company structure is a response to the tax culture and climate of the UK at the moment. It's an increasing part of our business. It's also increasing part of the mortgage industry, the availability of finance-based products. So yeah, absolutely. And we offer property investment advice. We have relationships with financial advisors who can help them with the structure of their investments. But yeah, we're all investors. We understand the structure.
I think the only point I would add to that, so other than yes is the answer, I do think generally investors or people buying properties through companies do need to be mindful of, it's not a kind of an easy tick box with HMRC, i.e. buying in a company doesn't automatically mean that you get tax relief. You have to be a proven property portfolio professional landlord. So there are certain caveats, and it is something to be mindful of. So if the question was credit related, then yes, we can assist with that. We do have developer finance, which is without any credit scoring. It's purely just an attachment to the asset. But if the question was around from a taxation perspective, the general answer would be careful around expecting to get tax relief just because you own one property. It's very questionable whether you would secure tax relief on an individual asset or multiple assets if you're employed and you're not a professional landlord.
Okay, well, we're going to wrap it up there. So thank you all, first of all, for tonight. I hope that they've answered your questions. We do have lots of questions, so
should we say that we'll get in touch with everyone who's asked a question? Fisher, we've been we've waffled. Hopefully it's been informative, but yeah, I think we can see their details and we can't answer every question.
I think it's worth getting in touch with everyone who's kind of registered in, and we'll be in touch.